Chapter 3, Municipal Securities. General Security Registered Representative of the Examination places heavily emphasis for the municipal securities because of the successful candidates qualified to deal with the municipal securities, no additional exam requirement. In order to prepare for your important area of municipal securities, or the coverage will quite extensive with a carefully study of the following material will important part of your work. Municipal securities are issued by state, cities, or other political subdivisions, including municipal authorities, which construct and maintain facilities such as bridges, tunnels for the public use. Municipals are generally divided into two categories: general obligation and revenue bonds. Types of municipal security: general obligation bonds, unlimited tax bond with a securely full faith with the credit dignity taxing power with the issue without limit the rate of amount. Limited tax bond secured with the full faith with the credit with the taxing power with the issue but limited to the rate and amount. Limitation issuance of voter approval, statutory constitutional restriction. Voter approval is submitted with a referendum to the voters for approval. Statutory limited imposed by the laws of the state, which can be changed only by an action of the state legislature. Constitutional limited imposed by the constitution of the state, which can only be eliminated by constitutional amendment. Revenue bonds generally payable to the revenue project with a facility finance, usually not subject to the debt limitations, so there no secured but full faith and credit the tax-paying taxing power to state municipality. Shows a picture of the state. Usually issued obligations legally created the authority of the commission over the state with the municipality for a specific project of facilities such as the New Jersey Sport Authority. Source of the revenue. Charge to use their facility in the form of the tolls on the fees such as toll roads, bridge for the sewer system. Special taxes levied to the state with the municipality to provide additional revenue to the authority with certain limitations. Rental lease payments of the contractual agreement to define that amount over the definite period of time into the public agencies such as state with the municipality, private agencies such as a corporation, company, tenant, or lease, or legislative appropriation. Either state with the municipality could even assign a portion of the general fund supplemental revenue, particularly in the facility, is of special benefit to the area. Security of revenue bonds, protective covenants, agreements of the enter between the issuer and the bondholder of the later protection. Rate of covenant issue with established maintain rules of revenue sufficient to meet with the operation maintenance annual debt service with certain reserves to cover all contingencies. Insurance covenant with the insurance issuers maintain insurance with the amount sufficient to cover all of the contingencies. Maintenance covenant issue to keep the facilities in good repair, working order. Non-discrimination issue given the no free service except in the case of public emergency. Engineering reports issue to retain service with a reputable engineer to oversee the facility. Records and reports at least one audit by the CPA mandatory with the up-to-date with the principal underwriting recommended. Additional bonds indentured should allow for them debt may be equal or junior lien to outstanding bonds. Earnings should be sufficient to support all debt if the lien is equal. Closed-ended indenture, no parity lien bonds except the completely facility. All other addeds must be junior lien. Open-ended indenture permits additional bonds under formula for the coverage of the debt service requires to include new bonds, usually based on prior year's net revenue projection. Completion provisions to issue the bond necessary to complete the facility to protect the original bondholders. Application revenues generally applied in this order. Operation maintenance fund provides funds to keep the fund facility in proper or condition or bond produce revenue. Bond surplus and or sinking fund monthly allocation revenue sufficient to meet with the current principal interest of serial bond. Deposit sinking fund to meet the future principal payment of the terms. Debt service reserve funds allocated to provide next year principal or interest on serials or 2 years interest on the terms. Reserves maintenance funds allocated to provide next year principal and interest in serials on 2 years insurance on terms. Renewal and replacement funds contribution made only in excess funds are available. Surplus fund excess funds left after contribution to above funds made use of the retirement bonds make improvements extensive of the facility also could be used for any other lawful purpose. New housing authority bonds. The bonds, often called public housing authority bonds, are issued local housing authorities secured by annual net rentals of facilities, annual contribution contract with the Public Housing Administration, unconditional pledge to provide balance of funds sufficient to pay principal, interest, and fees of the United States' pledge, which gives the bondholder a tax benefit of municipal security plus U.S. government guarantee. Other bonds, special tax bonds, payable only from special fund with no full faith, credit, or taxpayers' taxing powers. Excess tax levied on particular item or items, usually semi-luxury items received which were pledged to debt the service. For example, Puerto Rico has issued rum tax bonds backed solely on the revenues produced by the tax. Special assessment levied against those with the primary benefit of the facility, usually limited to improvement in the area. Lease rental procedure of the authority is sufficient to cover the principal interest requirements of activity of the build sports exposition facilities. Moral obligation state with the municipal does not provide full faith credit or taxes payable with a special source with no legal obligation. Industrial development, revenue bonds secured with a lease or contract for use of facilities. Pollution control, revenue bonds issued with the construct contamination facilities to meet ecological requirements generally secured by lease for use of facilities. Note the quality of the leasers are the real basis of evaluating the securities. Refunding bonds issued redeeming outstanding bonds usually provided a specific advantage of the issuer, such as lower net interest costs. Advancing advance refunding bonds issued redeem outstanding bonds usually intent with obtaining better rate with relieving the issue of the certain restraints of the outstanding issue. Double barreled, seemingly secured primarily with revenue by supplementing tax power to provide deficiency when the debt service. Notes, you have your project notes or PN issued local housing projects, short-term temporary financing, taxes on federally and state issue. Securities are secured in local issue, full faith credit over the U.S. pledge, interest paid at maturity, bearer 60 days to 1 year maturity. Tax anticipation notes issue short-term provide funds for the general operation. Municipality taxations are usually due in the various types of years which may not coincide with the expense are due to the payable. Bond anticipation notes they issue short-term intern financial pending issuance of permanent bonds, usually for some public project. Revenue anticipation notes issued short-term provide temporary funds needed before cash inflow is due from source of the other than taxes. Construction loan notes issued short-term provided temporary funds during construction period of test facilities. Tax treatment interest income under existing statute result in numerous test cases. Interest derived from the bonds of the various states, territories, commonwealths, public subdivisions of each, including authority of the District of Columbia, except for the federal income tax with the doctrine of the mutual immunity with the taxation is found with the concept of the inheritable separation of power of the various state and federal government, which each reserve right to conduct its own operation. Formation of the United States Union of States benefit of the group that did not take it away with the right of states to govern themselves independently, raise funds, means of the debt, security, and to finance their operations. The Supreme Court has held to accomplish this end with the national under the under our system of government. They are reciprocal of immunity and federal taxation. States the state of taxation of the federal. However, the Tax Reform Act of 1986 distinguished between municipal bonds issued before August 15, 1986, and those issued after the date. A municipal bond issued prior to the date returns any of the tax-exempt features that they offered before. Municipal bond issued after the date falls into the 1 of 3 quarters, depending on the purpose. Public purpose bond issued directly by the state local authority used for the traditional municipal projects such as new schools, highway improvement programs. Municipal bonds are tax exempt. Private activity bonds, although issued by the state and local government, they are supply funds to the private projects such as sports arenas, shopping malls, civic centers. These funds are subject to federal taxation but may be exempt from state and local taxation. Non-government purpose bonds, these bonds are raised funds from non-governmental use such as housing, student loans. These tax exempt as far as chapter consider all bonds under discussion as tax exempt. There's no reciprocal agreement between the various states with regard to the taxation of each of the other bonds, with the one notable exemption nearly with the territory of the Commonwealth located geographically outside of the continental United States. They enjoy one exemption with both federal and state taxation, included with the political subdivisions of the same. Thus at this time, when the municipal securities issued with the Puerto Rico, Virgin Islands, and Guam are except for the state and the local income taxes as well as federal income taxes. Alright, the enjoyment and exemptions for the both federal and state taxation included political subdivision, same as the stem of the municipal security, the issue Puerto Rico, the Virgin Islands, Guam, except all the state of the local income tax as well as federal income taxes. General rule of security, multi-state authorities enjoy tax exemption with each state, but it has been policy each state would exempt from the taxation within the state bonds of its own political subdivision, shove the income of the bonds of the other state with the public subdivision and agree with the taxes. Therefore, New York City resident purchasing municipal security issue the municipality authority within the state of Buffalo, New Siena County, City of Yonkers Municipal Associates Corp. would gain triple exemption from federal New York State and New York City income tax. Value of tax exemption to estimate the value of the necessary to determine how much of the greater yield would necessary to return some of the same result of the payment of taxes very dependent upon the tax revenue of the investor convenience of the tax equivalent yield tables have been published showing with the relation of the federal taxes stand with the state and the local tax rate factor into computation simple to derive the overall of the taxable yield necessary to obtain the same result of the gain from the tax exempt securities. To compute with the comparable to tax yield required to equal the tax yield for yield derived with a tax-free coupon, the difference between the client's federal tax bracket and 100%. A client 28% of the federal tax rate is offered the tax-free municipal yield with 9% of this would have the required full tax bond with a retained small, same number of the dollars, 1.0 minus 2.8. Federal tax bracket 0.72, $9 over 72. 9% yield over 72 is equal to 12.5%. For further saving the may accrue with the investor due to the saving on local taxes. Premium and a discount for the ideal with the investor side with all the bonds remaining with the par of the entire life with the would simply with the taxes and with the competition eliminate gains loss with the how with the general market varies regularly with the result of the principal price of the bonds varies reflect with the change with the hence with the necessary to treat with each situation in a different light. Amortization over the premium similarly stated with the premiums must be written over the life of the bond. It has effect of reducing net tax exempt yield system since the reflection of the current market yield on the bond since the coupon rate of the bond is always constant lowering the yield of the must be accomplished with the rise of the principal price with a fixed standpoint with the investor therefore must adjust his cost with the amortize with the non-deductive expense of the loss indirectly has the effect of the reducing tax exempt income. Any profit or loss over the appropriate cost adjustment result of the sale of the security would then be principal in nature. Example, the client purchased the municipal security the price of $110 or $1,100 for the bond below nature of the extent of the 10 years the client may amortize with a $100 premium paid over 10 years of the bond simply divide the premium of 100 by the number of the year of the maturity 10 right with the annual amount to be amortized at $10 less the client hold of the bond for 6 years he was cost will be reduced to 104 6 years at $10 each for the equal $60 to the state of 105 equals $1,050 at the point would result in a long-term gain of $10 per bond. Appreciation of the bond discount with the conversely with the necessary with the creep of the bond discount with the adjust for the cost over the life of the investment. Original issue discount with when the bonds are purchased with the original issue the discount. Of the discount considered the part of the interest paid with the bondholder the use of the money with this interest amount with the federally tax exempt with the increase the yield of the investment. Recent the use of zero coupon bonds taking advantage of the factor investor might by 100,000 face amount zero with the investment of perhaps $35,000 brought into the original issue held with the maturity the $65,000 additional receipt of the considerable income under tax law of the municipal bond income of the federal and perhaps locally exempt the income tax. Market for municipal security to indicate a blue list daily publication of the bond year listing with the muni bonds offered for the deal. There's contents are listed alphabetically by state of the maturity with the chronological order offering yield and dollar price included with the total volume offerings listed daily. Bond buyer daily publication on the bond deal with the non-relevant municipal with the information of the dealer subscriber in addition with the provide summary with the recent bonds with the unwriting showing with the percentage of the new offering sold with the take of the down in the accounts. Indices. Each Thursday after the yield of 20-year long bonds is published. Index that reflect the general trend of the market with the previous week with additional 11 bond GEO index of the index of a 30-year review of bonds is provided. 20 bond index is composed of the bonds with a 20-year maturity rating and equivalent to A, and 11 bond index composed of bonds of 20-year maturity and rating and equivalent to the AA. Visible supply. The most issuers provide a bond buyer to detail with the coming sales, which then compiled with the total amount of representing with the number of bonds that will be offered to the underwriters usually exactly next Thursday. Next 30 days with the bond buyers is only available on the internet. Download Dow Jones Municipal Index weekly average, the leading state major city tax exempt bond yields, primary market type of the underwritings. Competitive bonds, most generally obligations are sold under the seal of the bid. Procedure for each underwriter group thereby places a bid for issue with the best combination of the price interest rate being winner. Negotiated sales may give the case of the advantage of the issue of the retained service the experience of the municipal deal with the proposed bond issue the due with the underwritings. Therefore, they enter the contract to provide the financial service with the inception to the market, although the most negotiated sales offered to the public and some of the offered privately to the institutional investors. Source of the information proposed issue the daily bond buyer with the publication of the mainly show for the advertising show for the coming issues also provides worksheet with the pertinent information necessary to prospective bidders. Muni fax and wire service to the dealers of listing coming sales without detailed information. Newspaper publication issues off the take with the ads local news papers coming and bond sales some in the areas of the country. Information on the sales some in the limited publication some of the information to all local dealers. Direct mail. Issuers often send with the notice of the sales and bid forms financial statistics to all the dealers who had been on the prior issue. Some of the area with the proven attorney mail with the information to all of the dealers who are on the mailing list of the attorney. Procedure particularly used for the issue for the local and have no national appeal. Official notice of sale, official statement in the most notice of the sum of the general format. Most statement is contained with some of the pertinent financial information. Bidder determine the general condition of the issue. The most notice spells out with the following information: date, time, place of sale, completion, description, issue, the include of the par value, purpose of maturities, and so on, manner of the bid. Whether there are occasional oral bids, auction, general most sales are the conducted with the sealed bid process. Authority to sale. To bid acceptable, the underwriter of the bond may be issued under some of the constitutional statutory power that will make the legal and valid obligation. Type of the bond, various types of bonds, including general obligation, unlimited and limited tax, and special tax and revenue. Interest rate limitation. Some of the issues specify the maximum rate of interest, otherwise specified limited interest. The difference of the multiple coupon rates. Some of the specific multi-coupon rates, and some of the even specify the multiples of the 1/20th to 1/8 1% of the acceptable rate. Unit interest payment dates. Interest due to the generally payable semi-annually. Usually one payment a day corresponds to the maturity of the month of the bond. More often, the first coupon may be more or less than 6 months, depending on the day of the issue. The denomination registrations. Virtually all bonds are issued at $5,000 pieces. Most bonds have provision of registration as to a principal or principal interest. The amount of bid. Some issuers specify that no bid less than the par will be accepted. Otherwise, place limited with a discount with the par will be accepted. Still, others specify with a maximum limit above par. Expense limit. Liability with the cost of printing with the attorney fee with the usually with the bond issue with the cost of the paying an agent. Most issue of the will is delivered with the buyer free with the nearest majority city with the elsewhere with the cost of the purchase cost insured bond with the will be specified at the time of sale. Good faith deposit. Most issue of the required with the deposit of the company bid ranging from the set amount with the percentage of the par value, usually 1/2 to 5%. This is protect the issue for the case of the buyer does not take over and buy the bond, pay for the bond. Some of the municipalities do not recover the deposit. The deposit held in escrow until the delivery when it is maybe to be applied to the purchase price of the return to the buyer directly. Name of the proving attorney of the bidders, depending on the attorney with the protection of the nature of the bond with the valid issue with the required of the attorneys generally recognized within the industry. Bid form of the forms are dependent on the condition of the award. In general, they will provide a par value with the total principal to be paid with the interest rate, the rates per maturity. With the total interest net interest cost, some of the forms may not require all of the above. If there's only one interest rate permitted method of the placement and settlement. Placement and settlement usually is mutually agreed upon with the issue of the settler, generally in a major city with a larger issue that's signed by the machine that organized by our attorney with the located with the issue or city that's covenant. Internal banking is available. Payment is made only one of 3 ways: banker, cashier, check with certified, check with federal funds. After count and examination by purchase for the examination of the executed bond by the attorney, closing paper to legal opinion by the attorney, payment by the buyer to issuer, and a closing is completed. Right of rejection. Common practice of the issuer to reserve the right of rejection of all bids. He is then protected for the case of sale with only one bid, which is in effect for the non-competitive. Basis for award. Generally speaking, the awards made for the lowest net interest cost for the issue with a competitive bond, but there might be slight variation in proceedings, but no net results are the same. Functions of the bond attorney. Establish eligibility with the tax exemption. Previously stated no interest all income of the municipal bonds except for the federal income tax under the Internal Revenue Code. Those approved by the bond attorney. The approving attorney so stated that his legal opinion, although he is careful to state with the exemption, only holds it under existing law. Authority of the issue of the before the proposed bond is issued can be put up to sale of the most established there is a legal date for the power to issue, but must be statutory power to no violation of state constitution of the statute which bond will be issued. In addition, all of the necessary steps that are required by the common law of the state that must be complied with in full with the judiciary of various states have rendering decisions in the past. Legality of the procedure of the bonds issue with the providing attorney ultimately review the end of the transcript of the proceeding of the bid. Some of the issuer has been followed with every procedure necessary to bring the legal and valid bond issue. Examine the executed bond with the attorney carries not only with the executed bond with the proof that's submitted with him before printing. He gives the final proof of the printer has he is satisfied with the content of the proof of the proper form prior to the formal closing payment with the attorney given the examine. So the executed bond statement, the final opinion that all of the requirements of legal proper negotiated insurance have been completed. Issue written legal opinion with the 3 basic documents necessary to complete with the closing of the bond. Issuing the Treasury, receive the signature, no litigation certificate, legal opinion. With the format of each of the documents may vary slightly. The concept of basically the same with the purchase, receive of the full payment of the issue with the usually specifying with the total principal, the entry of the total money transmitted, signature, non-litigation, paper to give the specimens of the signature, all issue with official plus a statement by the local attorney there is no litigation existing of the pending at the time of the closing that would affect the validity of the issue. Usually stated in the fact is the fact of the official and the officer at the time of the signatures are guaranteed to be authentic to the local bank. Legal opinions are very greatly length and general obligation is usually relatively brief with the revenue bond. Legal usually when quite long, often there is insufficient space to have them printed on the bonds. Generally they are composed of complete description of the issue that include the day of the issue, coupon rate or rates, call features if any of the insight of the authority of which of the bonds are issued, but in some case of the facts of the legal of the opinion of the file of the trustee of the pay agent was printed on the bonds. They are accepted as good delivery form, even the purchaser is entitled to originally signed by an approving attorney. Formation, underwriting, accounting, syndicated accounting formation procedure. For the most dealers with the bank dealers have at least one individual, in many cases the entire of the department, exclusively devoted to the underwriting of the new issue. The result of all the described of the bond buyer with the following schedule of the bonds. On one of the issue of the natural interest, the management has historically been in the hands of the major firms of the bank on local issues, which usually are much smaller in management of the bid rest on the local dealers. Over the years, the syndicates have formed the bid jointly on a certain issue. Therefore, we're in notices public the new issue by the issue of the invitation extended by the management of all members to the prior accounts, usually with the form of a letter outlining all pertinent details, including proposed participation fact if the participant is willing to accept the other usual duties and responsibilities involved by signing and returning the letter to the manager of the member has indicated the desire to participate in the underwriting. Competitive bid generally creates a number of syndicates that opens ways for the bond firm to receive the invitation bid jointly with the result of the merger of the termination of the makeup of the account with those changes of the providing opening for the new forms again with acceptance may escape of the co-manager of the office and rotation of the management issue customary to permit firms to withdraw from one account to join with another provided decision made in advance of any discussion of the pricing of the bidding. Generally, particularly large amount of the pricing of the governor with a poll of the major members of over the group at the primary meeting. However, the lower bracket of the members are invited to attend all meetings. The final meeting is generally scheduled about 1 hour before the sales time. Manager give the maturity yield of the common over the tenant spread. And sometimes pre-sale entry sometime, but the members are also polled to desire to remain and withdraw. The statement of the option limiting their participating, being willing to accept more bonds. Many of the town members use proxies who receive specific training instructions to act as a member. In this case, they were the members not and president not proxied. Manager review the original syndicated letter of the members of the authority of commitment. The manager exclusively has the responsibility to submit the bid as an agent of the group and to provide with a good faith and deposit of the personal representative of the sale of the use of the agent to submit the bid at the same time of the opening bids for the non will be accepted after the online term extended the agreement of for his protection liability reason for the late bid any other intentional error when bid time arrives customary with the competitive competing group of the checking bids of the determine the group that whom issue the subject of the official award by the issuer in the business and particularly with the security industry. Time is of the essence when the reoffering issue when awards become official. The manager sends confirmation purchase letter containing the following information: complete description of security including par value, common maturity, net, and reoffering sale. The average unit dollar production of sale, profit spread, the net dollar on the issue with the dealer with a concession per maturity member taken down per maturity, request the proportional share of the good faith based on revised participation, and a duplicate letter of sign and return. Customarily, the manager establishes often a period of the following meeting ranging 1 hour more hours during the time all orders that will have same priority. Upon following these orders, balance of the unsold bonds are available to all the members of the first come basis. Summarize the role of the managers confer with upon his extensive authority to act on the behalf of the formation over the joint account until the final settlement, including the banking and carrying of unsold bonds. Allocation procedures orders are submitted to the manager on first basis prior to the sale having the top priority, and in order to properly equate to these orders should have the preference because they provide manager with additional strength to support the bid. The second priority of the award is given the group of the net or of the benefits of the account as a whole. The third party priority could be twofold: group of designated less concessions. The fourth would be designated less to take down final preference would be members of the takedown. The manager's discretion usually decides priority of the last groups based on the overall account benefit. In many cases, the very difficult decision, particularly with the account with a potential sellout possibility. Type of accounts. The two types of accounts are the Eastern undivided and Western divided. With the first type, all bonds hold in the hands of the manager. Each member's performance benefits of all the members of the remaining liability, which are same proportion of the original percentage. Of course, it's a seller who still makes most of the profits and the benefit of the normal takedown sale. Even the dividend acts often with the customary to have the early maturities undivided and balance divided by the maturity bracket. The divided account provides greater profit potential for the member with showing the ability plus the reduced the remaining liability regardless of the performance of his co-members. Additionally, he is able to make him with the taking down of his deal within the various bracket with the discharging his liability. Additionally, he received additional compensation overall sales charged by the underseller of the discharging of the member's liability. Example, $10 million offering a member of the syndicated made with the Western account with the underwrite $1 million for the issue should that the members of the members sell with the amount of bonds has no further liability, although he sell with additional bond with the $10 million offering done with the issue of the account with the member to underwrite with the 10% of the issue. In this case, he's liable to 10% whatever the balance remains in the account, with the member may sell with $3 million to issue with his clients. However, the unsold balance of $2 million still remains in the account. He would be liable for $200,000 over that account. Each type of account has a certain advantage of the Eastern account, with the remaining unsold divided among the members of the direct proportion of the original participating, regardless of the members of the tail of the Western accounts. On some unsold balance are allocated based on the scale of performance of the members. Of the summary of the pros and cons of each type of account with the member business may be viewed with existing today. General accent with the place on the selling of the distribution there only with a very small portion of the spread after normal account expense. It's left in the underwriting and profit. The profits are minimal relation to the original liability as a result, except for the odd-line firms who will still place the value on the position of the business and their ability to formulate actual bits of real money makers or the sellers merely having access to the bond satisfied with the most smaller firms that definitely contain their liability in the unsuccessful accounts. Termination of a syndicated debate. A short time prior to the sale of the manager of the major bracket and members run at the offering scale of the yield per maturity with a converted into the dollar price with the arrive with the unit of the price of the deducted with the profit spread with the net result with the dollar price of the principal bid to the issuer. The coupon rates are projected over the life of the issue with the converted into the unit interest cost with the premium to discount with the principal will be added with the deducted to maintain net interest cost figure for the most award based on this issue on this basis. On an issue with the one coupon is permitted the lowest interest rate received the award, and the duplicate rate bidding the highest principal price wins. Profit and loss allocation settlement of the account will vary between Eastern and Western. Both types are all proper or expense for the charge for the account with the net proceeds. Sales are credited with the result of the leave of the net profit available to distribution from the members of the proportion of their original participation. The procedure is the same with the divided accounts except for the other oversell of the underseller factor. Payment and the delivery. It's usual notice of the sale of the state with approximately delivery date shown with a guide with 3 to 5 weeks after the sale of the region of the delay with the usually attributed to the volume of the bonds relative to the limited number of the banknote companies available for the printing. However, the issue of the buyer sold with a multiple agreement at the time of the place of the close of the issue of the purchaser may thank the agreement to make the payment. A certified bank check for the bonds. Rear cave for the federal funds checks all of the buyer provides the funds before closing the purchase council. They examine all of the bonds that certain that have been properly executed and satisfied check for the signature with no litigation certificate and they read the opinion with approved attorney finally with the buyer check for the treasurer receipt with all being in order making payment that takes up issue final money represented with the principal bond accrued interest date with a delivery public offering after award of the issue of the purchase of all bonds offered by the sale of the members of the investment of the initially all bonds held by the group that can only be offered at a set scale of the price of the case of all the sales of all the non-members of dealers of the concession sets by the group. All sets must be cleared and taken down by the manager. Subsequent offers may be reduced price for the concern with the majority of the account members. Upon occasion, lower bids may be offered some of the other remaining bonds. The account may be pulled with the acceptance and the rejection of the bid, although these factors make it necessary to give the manager certain discretionary authority within certain limits. Calculation. All municipal bond yield with the interest computed within 360 days basis. Municipal notes are generally computed with 360-day basis, but many have been issued 365-day basis. Basis book. Before the event of the computer, the financial publishing company purchased a variety of the basis and a separate coupon rate with a series of the table representing both the dollar price of the yield every month until the maturity yields of the very listed vertical on the page of the dollar price per month horizontally and yield of the dollar price are not listed had to be interpolated would be possible because of the 30-day consistency of the scale. This is an inverse relationship between the price and yield. The higher the price, the lower the yield. The lower the price, the higher the yield. The accrued interest new issue is usually figured on 360-day basis with the date of the issue, settlement date with occasion with their long or short-term coupons, date with the difference for the months of the maturity. Secondary market accrued interest computed with the previous coupon maturity and settlement date. Interest in municipal computed upon not include the settlement date of the trade. The buyer pays to sell the accrued interest for the day of the last coupon and with the municipal bond interest computation all months of the given 30 days of the year is considered 360 days. For example, on Monday, June 6th, the client purchased $5,000 municipal bond at 6.5% interest rate with paying with interest on January and July 1st. So the trade was made with the regular way. The compute the interest for the first determination of the settlement of the day of the trade with the regular way. The trade with the municipal settled the third business day of the after of the trade. Thereafter, the settlement of the day was Thursday night. The buyer would pay the seller 8 days interest of the June plus 30 days of the preceding month. So 158 days of interest. When using the formula computing interest, eventual build time, rate time, interest, we know the principal was $5,000, interest rate 6.5, was calculated out with the date of the 580 days calculation, and is complete with the buyer pays for the agreed price of the transaction plus $142.63 interest for the seller. No interest on the U.S. government securities is computed differently. Here was used the 365-day years, each assigning each month its exact number of days. Some of the bonds pay interest on the day after the first month. For example, if the bond pays interest on January and July 15th, it would usually 16 days interest for the January. Buyer would pay interest on January 15th plus the remaining 15 days on the 30th day of the month. Net yield capital gain tax. The applicable bond selling with a discount of the institution does not receive the benefit of the capital gains risen, so the accretion of the taxable ordinary income regardless of the duration of the hold. Individuals meeting the requirements to receive the benefits of the long-term capital gain tax rate. Keeping in mind the long-term capital gains are taxed in the same ordinary income institution. Taxable equivalent yield of this return of the rate of the taxable base needs to produce the equivalent yield after the tax is equal to the tax exempt yield. Current yield, the rate of the return in relation with the dollar price for the coupon rate, with the computed with the dividing with the coupon rate by the dollar price with no consideration given the amortization primary accretion with a discount with the term yield with the debt security defined with the percentage of return with the purchase for the receiver on this investment yield can be expressed in three different ways: nominal yield, the current yield, and yield to maturity. Nominal yield is simply an annual rate of the interest of the saved on the bond with the carrying 6% with the day of the interest rate that has a nominal yield of 6% with the base of the face value with the $1,000 of the bond that does not take with consideration current market price, which most often will be other than $1,000. Nominal yield also ignores the facts of the bond, unlike with the stock with the majority of the day with the time bondholder will receive the $1,000 from the issue, which may be lesser his actual purchase price. Current yield is computed with the same manner with the one over the calculated with the yield on stock, which were we were told the General Motors common stock was trading 61% per share, paid an annual dividend of $2.50 per share. Would compute with the yield of the dividend with the dividend of $2.50 per by the market price. The result would be current yield of 4.10%. Current yield on the bonds figured exactly in the same manner. We are told with the client that we own 6% general obligation bond trading in the market price at 82% with the $1,000 faces or $820 with the term of the current yield of the bond with the dividing of the annual yield 60% with the current $60 with the current market price at $820. But the result would be a concurrent yield of 7.3%. Yield of the maturity, the average yield. This takes consideration of the fact that the bond must be purchased above below the $1,000 face value. Investor will be paid $1,000 maturity. He will receive more or less of the original investment bonds purchased above the face value of $1,000 are said to be purchased at the premium. Those purchased below the face value said to be purchased at a discount with the competing yield of the maturity. We consider premium and discount in our calculation. Client purchased the one state with the Kentucky 8% of the go bond over the price of the 91. The bond will mature in exactly 9 years. Determine the total discount subtracting the purchase of the $910 from the face value of the $1,000. You will be paid the holder of maturity of the $90 discount. Step 2, most of the annualized discount, dividing the total discount $90 number of the years within total of the maturity 9, perceived as accretion of the $90 total discount divided into 9 years equals $10 annualized accreted discount. Step 3, now an additional annual accretion of $10 of the annual interest received with the bondholder with the 80%, which is $80 or 8% on the 100%. $1,000 face value with the $10 accretion plus $80 annual interest equals $90. This would be the average annual return received with the bondholder, $80 of the interest plus $10 accretion. Step 4, when you now divide $90 interest plus accretion and the average bond current price of $910, the bond eventually prices at a maturity level of $1,000. This is called the rule of thumb method. Maybe you the guy to determine the yield of the maturity. Let's not try another example of the bonding trading at a premium. A client purchased with 6% revenue for the price of $107.5 at $1,000 face value. The bond matures exactly 15 years. Nominal yield shown early interest rate on the bond 6%. The current yield of the determined the dividing annual interest rate $60 6% of $1,000. Maximum market price $1,075. This is equal to 5.5 current yield. Yield maturity is determined in the same way the bonds trading with a discount, except for the well the dealing of the premium bond with the bonding is trading at $1,795, within face par of the value of the $1,075 differences. The premium, again, with the annual life of the premium dividing with the number of years remaining by until the maturity 15. This is known as the amortization. Total premium of $75 divided by 15 equals $5 annual amortization. At maturity, the client will receive $75 less than he has paid for the bond, as it averages out $5 per year over the 15 years. We now do the true annual return subtraction. $5 annual amortization at $60, or 6% with a $100,000 annual interest. We're going to divide the true return of $55 average over the current price of $100,075, eventual price of $1,002 to determine out the yield of maturity. And we get 1,300, so $37.55 average price, 55 true annual return, 1,037.50 average price, 5.3% yield to maturity. Amortization of premiums. Premiums must be written annually with not to deduct the tax purpose and effect with the represent reduction coupon income to the holder, even if the whole coupon is fully tax-exempt income. Accretion of the discount. With the discounts accreted with the annual basis not taxable until the sale of the maturity of the individuals. The capital gains institution for the ordinary income. The coupon interest fully tax-exempt. The debt service computation. The debt service fund is required to pay the principal of the interest over the life of the issue of the annual debt service fund, but is necessary to pay with the maturing principal interest on all outstanding bonds each year with the level of the debt service fund, but necessary each year of the pay even of the amounts of principal interest over the life of the issue. The dollar values of points and fractions. Basic unit of the municipal bonds, $1,000. The dollar price are figured out with the late the unit of the 1 point represents $10. Fractional points are portions of 10. For example, the half a point would be $5. 1/8 of a point would be $1.25 for the principal, and $98.05 for the dollar, with the $986.25 at the present time. Of the vast majority of municipal bonds are traded with the decimal basis. Relationship with the bond and prices and change. Maturity. The general rule is the longer the life of the bond, with the maturity, the greater tendency for the price. Alright, where were we? Relation bond prices to change. Maturity. General rule: the longer the life of the bond, with the maturity, with the greater tendency for the price to vary with the region and the degree. This is the degree of the future the future can be predicted. As a result, fixed with the income security with the subject of the effect of the change with the various unpredictable financial, economic, political factors. The result uncertain, particularly in the fact that the negative changes of the curve of the bond is rewarded with the risk of the form of the lower price. The coupon is general rule: the higher the coupon, higher the price. Lower the coupon, lower the price. Yield is general. A yield is related with the risk involved with the result of the related with the life of the bond. With the shorter the life, the lower the yield. With the longer the life, the higher the yield. However, all three interrelated prices yield the beginning with the ultimate, with the determinant of the factors strengths of the bonds are traded with the yield base. As a result of the inverse relationship that can be summarized with a higher yield, the lower the price, of the vice versa. The yield to call of the bondholder may expose the possibility of having the bond redeemed prior to maturity, even though such redemption is not necessary. The form of the sum of the protection ensure that it will receive its return yield eventually, since all call of the price over the par for the higher the bond with the sailing of the discount are not affected. The holder can certain to receive the yield of the discount dollar price of the maturity than a call date, but conversely with the premium bonds, a higher figure with the maturity than the call date. As a result, the bond or held may not receive the expected yield returns if the bond is called. To affirm the protection of it eventually with the price figured on the premise if the call could occur with when there with a multiple call option, the yield figured to the call will produce the lowest dollar price as a result of the holder assured of a worst case scenario yield. Flat without interest. When settlement date with the coupon date simultaneous with the bond are traded with the X interest with the bonds, or default with the trade without interest flat. In this case, the settlement must specify the past due unpaid coupons are attached in the bond. Basis of points. Basis of points represent 100 of the 1% of the yield, with the equivalent of 10 cents. Value of mill, 1/10 of the cent of the reason of the mention of the value of the mill because of the sum of the municipalities, even the amount of the applying tax to the state of the Connecticut is one example. or federal legal consideration issue with the distribution of the municipal security. The municipal security is currently exempt from the registration requirements of the Security Act of the 1933, requirements of the Security Exchange Act of the 1934, Municipal Security Rule Making Board Regulation, underwriting under Security Act of Amendments for the 1975. Disclosure capacity. Each of the municipal security of the dealers was submitted in order to syndicate with the member of the syndicate with the purchase of the municipal security held by the syndicate should disclose at the time of the submission such of the ordered securities are the being purchased with the deal with their account with the account of the related portfolio. So the municipal security dealer with the municipality security, the investment trust, and sponsored by each of the municipality securities dealer accumulation account established in connection with the sale of the municipal securities investment trust. Confirmation of sale with the security held by the syndicate with the relative of the portfolio municipal security investment trust accumulation account referred to as section above the shall be confirmed with the syndicate manager directly with the such related portfolio municipal security investment trust accumulation account with the municipal security dealer submitting the order. Disclosure of the group orders and so that indicate shall establish priority to the order of the different type of the order of the purchase security with the syndicate during the underwriting period. If the security may be changed, the procedure may be changes priority orders. Every syndicate shall establish the priority to accord a different type of the order of the purchase security with the syndicated during the underwriting of the period of the security may be changed with the procedure making changes. Communication relating to priority orders or orders period with the priority of the first offer to any securities of the by syndicate, senior syndicate manager of the church furnished for the writing of other members of syndicate one priority to accord with the different type of the orders of the security of the duty distributed by the syndicate to do the procedure if any by which such priorities may be changed. 3. The senior syndicate manager of the managers are to be permitted with on a case-to-case basis to deviate from the agreed upon order to priority the fact that the mayor permitted to do so, and if there is to be any order period where the orders may be confirmed prior to the end of the order period. Disclosure syndicate expenses all at before and the final settlement of the syndicate account. The senior syndicate manager shall furnish for the other members of the syndicate itemized statement of the setting forth of the nature of all amounts of all actual expenses incurred on the behalf of the syndicate. Regulations of municipal market professionals. Municipal Security Ruling Board is independent, self-regulated, organized, designed to establish rules, regulation, municipal securities industry. The board consists of 15 members drawn with equally side of 3 areas: 1 security firm, 2 with the bank dealers, 3 public members. Under Security Acts of the Amendments of the 1975, enforcement by the Municipal Security Rule Making Board rules and accomplished for the Security Exchange Commission of the National Association of Security Dealers and the Federal Reserve Bank of the Comptroller of the Currency and Federal Deposit Insurance Corporation. Registration of the broker and dealer and bank dealers on the Security Exchange after the 1934. All broker dealers are required to be registered with the Security Exchange Commission. Rule banks are separately identifiable with the Department of Division of the Bank for the Union of the Bank for the conducts all of the activity of the bank relating to the conduct of the business of the municipal security dealer, such of the activities here and there defined, provided that one such unit is given the direct supervision officer of the officer designated by the board of the director of the bank that responsible for the day-to-day conduct of the bank's municipal security dealer activities, including supervision of all of the bank employees engaged with the performance of such activities. 2. They separately maintain and separately extractable of such units own facilities and the facilities of the bank, all the records relating to the bank's municipal security dealers' activities, and further provided with the records are so maintained, otherwise acceptable, permit independent examination thereof and enforcement of the applicable provisions of the 1934 rules regulation there under the rules of the board. For the purpose of this rule, the activities of the bank shall constitute the municipal security dealers' activities are the following: 1. Underwriting, trading, sales of municipal securities. 2. Financial advisor, consultant, service of the issue with the connection with the issue of the municipal securities. 3. Process clearance activities with respect to the municipal securities. 4. Research of the investment and advice for the respective municipal securities. Any activities other than those specifically enumerated above involved in communication directly and indirectly with the public investor of the municipal securities. 6. Maintenance of the records pertaining to the activities described in items 1 through 5 above. Security Exchange Commission. All municipal brokers and dealers are required to maintain a minimum net capital stated in the Security Exchange Commission Uniform Net Capital Rule or Rule 15C3. 1. The rule is not applicable to the bank dealers. All of the municipal brokers and dealers, including banks, are bound by the Security Exchange Commission anti-fraud rules. The MSRB, with the following the outline MSRB rules of the guide for the municipal security representative that enhance the knowledge of the business, the ultimate implementation rests with the official officer of the principal, the broker, and the deal. The historically municipal bond business was not regulated until the Congress passed the Security Acts of the 1975 gave the MSRB with the develop of the rule of the business of the board, given and steadily submitting rules for the approval of the Security Exchange Commission with governs all three of the security businesses. This really has been a slow process being municipal security of the unique position of the security industry. They are authorized otherwise issued by the state and public subdivisions of the state of the jealous guard over their freedom for the federal control. As a result, security exchange with the federal agency is limited to the regulation of the business as it relates to investment, but they do not directly control over the issue with which does not clear the issue with any federal agency in the case of that corporate equity of debt securities. Standard of non-professional qualifications. Standard of professional qualification. No municipal security broker or the municipal security dealer shall effect any of the transaction in order to induce attempt to induce the purchase or scale of the municipal security unless the municipal security broker, the municipal security broker dealer, and every natural person associated with the municipal security broker and the municipal security dealer is qualified in accordance with the rules of the board. Keeping and preserving books and records are to be made by the municipal security brokers and dealers. MSRB rules G8, G through G9, and G10. Security exchange rules 17A3 and 17A4. Chapter 4, Security Act of the 1933, Underwriting.